President Trump has realized that, and he's been signing executive orders ever since he took power last year to do with critical minerals, to do with mining and all of that. The world is turning away slowly but surely from financialization into hard assets. Tuesday, February 3rd, 2026, Mono 64, home of alternative economics and contrarian views. Well, today we're going to talk about physical supply because that's the underlying reason why silver has done so well in the last 12 months or 13 months. And yes, the volatility we've seen, not just in gold, but especially in silver these last few days, was just that volatility, a lot of noise, a lot of big players trying to defend their positions in the paper market. Yes, I was reading someone noted that the volume the other day was so huge that it corresponded to like 2 times the production of silver in 1 year, right? And how do they do that? Well, the contract size for the futures is 5,000 ounces. So you can trade as much as you want, especially if you have deep pockets like the bullion banks. But we're going to look at a very important announcement from the Trump administration, from the White House, to do with critical minerals. Because while unfortunately a lot of people probably got shaken off their silver and gold positions these last few days, especially people who have used leverage to actually not buy real gold and silver, but to buy instruments like ETFs, like futures, like options. Yes, I really think it's a silly thing to do in this massive bull market in gold and silver. We're just beginning, and I'm going to show you some charts, that long-term charts that will show you that, yeah, we're in the beginning. And as Jesse Livermore once said, arguably the greatest trader ever, he said, be right and sit tight. He also said that the best trades, and by trade, I mean it can be a very long-term trade. It's not like a day trade, but he said that the best trades are not taken on by the smartest or cleverest people. They're taken on by the most patient. And I think that's still paramount in this precious metals bull market. So we're going to look at that, some charts. We're going to look at what gold and silver are doing this morning. Here it's A4 to 8 a.m. London time. But before I do, I'd like to thank all of you for your interest in the channel, for your kind words. Yes, I try to read the comments section once in a while, and I'll keep trying, but I might not reply to your comments, but I see a lot of them. My wife as well reads a lot of them, and she tells me what they're saying. And I also recommend that you watch my, participate in the live streams that I make on Sunday at 8 hours p.m. GMT, which is 3 hours p.m. Eastern Standard Time in the U.S. There, I try to answer as many questions as possible, even though the LA last live stream was amazing. We got over 5,000 people all at once watching it, and it was tough to keep up WS. Yeah, thank you so much. For those of you who do enjoy the channel and haven't subscribed yet, think about subscribing. It helps. And also, if you enjoy a particular video, make sure you hit the like button. So anyway, back to gold and silver. And I've noticed that the FT has come out with a silly article about silver. And I'm not even going to read, well, I kind of read it through, but they're saying that it was the retail crowd that created the massive move in the silver price. But for those of us who've been following what's been going on in silver with supply, with all the silver that's been taken out of the vaults, of COMEX, Shanghai, LBMA. We all know that this is much more than just retail, and they're trying to paint a picture that this is over. And yeah, let them do that. Because they did the same thing in 2004. They said that gold was finished, that it was pointless to hold it. Yes, that's an editorial from them from then in 2004 when gold was at $400 an ounce. So read the FT, read the wall. Street Journal, read Bloomberg at your own peril. Yeah. And I noticed, though, that, yes, the bullion banks were heavily involved in the paper attack on silver and gold in the last few days. But I see that JP Morgan is still calling for like $6,000 or $65,000 gold before the end of this year. And I think they're going to be wrong in that. They're going to be too conservative on their price target. Yes, more importantly, and we've been telling you guys this here on the channel, and also other people in the precious metals like space, sound money space, the alternative space, the conspiracy theory space, right? There's a war for commodities now, and we covered that here on the channel like almost 4 years ago, because there's a guy actually from within the mainstream who worked for the New York Fed, who worked for Credit Suisse, Zoltan Posar, very clever analyst, who was telling us that with BRICS, with the world breaking up, with the war in the Ukraine, commodities are going to become a hot item. And commodities, of course, are really important as we're starting to see the critical minerals, the rare earths for the technologies that are coming, not just AI, but electrification and all that. You need these rare minerals, rare earths, whatever you want to call it. And for the past 30 years or so, with globalization, the West has dropped the ball. They've allowed China to really be the dominant force, not just in producing these rare earths, but also processing them into the finished goods. So now the U.S. has realized that, President Trump has realized that, and he's been signing executive orders ever since he took power last year to do with critical minerals, to do with mining and all of that. The world is turning away slowly but surely from financialization into hard assets. So this was announced, here it is, announced yesterday, U.S. to launch a $12 billion critical minerals stockpile to counter China's dominance. There you go. China's dominance, U.S. Export-Import Bank, will provide $10 billion in debt financing for effort named Project Vault. They mention here all the metals like copper. What else? Copper, rare earths, lithium, and so on. They don't mention silver, but if you go back to this article, on November 6th, it says U.S. adds silver and copper to critical minerals list. Yes. Why don't they ever mention silver that much? Well, because silver is a really important strategic metal, and it's becoming a monetary metal as well. So there you go. A lot of people got out of their gold and silver probably in the last few days, and maybe the miners even though President Trump is going to provide financing, the Export-Import Bank for mining. And it's hard when the market is volatile. People get out, and then the market rebounds so quickly that it's difficult to get back in. So, as I said earlier, be right and sit tight. Yeah, there are people who say, oh, you have to hedge your portfolio? No, that's for professionals. That's what hedge funds do. We as small investors, we just do our homework, do our research, and decide what we want to break of this line, and look at the bull market in the 70s. So what I'm trying to say is we're just in the beginning. So let's move over to silver. Silver is the same thing. Silver is just taken off a little later than gold. It's traded differently, of course. It's been suppressed for a lot longer. Yeah, but here's the quarterly chart. Yes, there's still a lot of room for silver to, for that chart to look a little more bullish, but it's still bullish. And if you look at what it did in the 70s and the breakout that we have now, we're still only in the beginning. We could go to a lot higher levels in silver. And yes, a lot of people are going to come lately. They're going to be shaken off. They'll never get into silver again. And but you will be like holding like a rock. That's what we need to be. We need to be like the rock of Gibraltar and let the market, the waves hit us and not react. The waves, of course, is the volatility. What else have we got? Yes, I wanted to show this chart as well. I've been looking at this because even though the silver miners have done well, they've underperformed the bullion. And if you look at SIL, which is a silver miner ETF versus silver, we're at very low levels. And recently we hit the lowest level ever since this ETF has been published. Yes, that was January 26, so about a week ago. And even Tavi Costa, who I will have on the channel, he noticed this as well. And he posted this about this ratio. Let's look at where the markets are then. It's 8 a.m. London time. So we've got gold actually up $256. Yes, it's at $49.15. The high has been $49.34. I guess 5,000 really is the key now. If we can get back above that level, we'll have to wait and see. There's still a lot of water to go. Under the bridge, today the U.S. markets haven't really opened yet. Silver is at 86.50. It's up $7, almost 10%. I wonder if they're going to use the circuit breakers to stop silver trading. If it goes up more than 10%, they probably will. While the high has been 87 and the rest of the markets actually are very quiet. So like the stock market indices aren't really doing much. And also the currencies, they're a little stronger versus the dollar, but not much to write home about. Anyway, yes, with that, I'm going to wish you all a very good day. Take care. Bye.